Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 28th, beautiful January 28th, terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call, If you knew, folks, that everything was going to turn out okay, how would you live your life differently today? The question for each of us is not, what would we do if we had the means, the time, the influence, and the educational advantages? The question is, what will we do with the things we have? And the reason is because you have an amazing power within yourself. Yes, it'll produce a life of abundance. It'll cure incurable diseases. It'll build billion-dollar businesses. It'll paint magnificent masterpieces because the world is your palette. And you are the artist. And since we control what we draw, here's an idea, an extraordinary habit for each of us when we are painting our masterpieces, and that is to look for something to appreciate in everything we encounter and every person that we meet. And there's no better time to begin this journey than right here, right now, today. I challenge you to give it a go. Look at each person you come in contact with today. Each person. And what I want you to do is I want you to identify one thing that they do or one thing that you could appreciate in them. And I want you to be so bold as to tell them privately. Tell them what you appreciate in them. You want to have a beautiful day, folks? This is the way to do it. And I say be generous with your appreciation because it will improve every single relationship. In fact, it may bring new courage to those facing difficult times, and there's really no way for us to know what someone else might be dealing with or what they might be internalizing at the moment, and you can definitely bring out the best in everyone. So give the gift of appreciation, folks, and do it as generously and as humanly possible as you can. For me, there are so many things that I am grateful for in my life, but the three most important are, number one, being alive, number two, having what I consider to be a pretty good mind, and number three, having the wisdom to say thank you. Thank you, folks, for investing your time with me each and every day. Yes, if you knew everything was going to turn out okay, how would you live your life differently today? Well, let's go check out the markets. Let's go see what kind of life they're going to lead today. Right now, we've got futures up. Dow futures up 47 points. They're trading out at 15,834. S&P futures up 3.5 points. They're trading at 1779. NASDAQ futures being led by Apple, to say the least, on the way down, trading down about $40 or so in the pre-market here. You've got NASDAQ futures off 14 points. They're trading at 34.88. Russell 2000 up a few points. King dollar up 3 cents. Trade out at 80.64. Not a ton of movement inside of the currency market. In the hard currency market, Goldilocks back $5 right now, trading at $12.58. Hi-ho silver back 6 pennies, trading at $19.73. I don't know if silver will ever get off the silver dime, so to speak, but I suppose that it will. It's just a matter of being patient, but it is wearing my patience out there. I don't know about you. Natural gas up a nickel, actually a little bit more than a nickel here this morning. Taking back some of yesterday's losses out there. Quick peek around the globe. Over in Europe right now, markets are green, and the DAX, it's up 30 points. The FTSE up 21 points, both about 0.3%. A little bit of a mixed bag. Really a flat market in Asia last night. Nikkei traded up 25 points, so no big deal out there. Hang Seng down 15 points. That's basically flat. And the Shanghai up 5. That was up 0.25%, but we will go ahead and we'll call that flat out there. Now, where should we begin? Where do we begin? I know that you want to know, where is the market going? So let's take a look at some different potential patterns out here, things at least for us to watch. And we're going to take a look right now. Let's take a look at the Dow futures. If you're watching us on TigerTV, and I hope that you are, because even if you've got a mobile device, you can watch the live stream of the show by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button. Click on that. The show will stream live to you. Of course, if you're listening on the archive, you can, if you're, well, then you already know it's on Channel 9. And what we're looking at here, for those of you listening on the radio, and thank you so much, or maybe it's TFNN.mobi, so many ways for you to carry TFNN with you. We're looking at the 30-minute chart for the Dow futures. Now, the Dow has been weak. It formed a little hammer candle out there. I believe the numbers were out. Which numbers? So it wasn't GDP. Durable goods. I think there was nothing good about the durable goods number out here. It did form a little hammer candle during that 30-minute session. Let me get my crosshair out here. Makes it a little bit easier. A little hammer candle coming in as we came into the 9 o'clock hour out here. Looks like the low of that hammer is going to be tested. The low on the Dow futures, that's down at 15,798. You're traded at 15,811 right now. Hey, you know the deal. You close below a hammer at 930. If you're long, you're wrong out here. We do have a price relative strength divergent pattern in the 30-minute chart in the week link out here. It actually was confirmed right about here, right here on the bar last night at 6:30 in the evening. That formed that little Miami hurricane. That's because it looks like the logo to me of the University of Miami. It's the U part of the logo out here. It's really referred to as a three-river morning star reversal pattern. But most trading systems only take a look at 3 candles out there. I have learned that the larger the number of candles, and that's meaning these small little bodied candles that travel within a little downtrend, and then you get, now ideally the real strength of these formations are when the actual upthrust, which is the one taking place at 6:30 last night, if that were to have taken out the full candle, or certainly at least the body of the downdraft candle that was at 4 p.m. yesterday. That didn't happen. It's still a reversal pattern. That says that we've got some pretty decent support at the low. We should have a decent support inside Dow futures at 15,763. So we got the bulls trying to step in here. Now, that reversal formation really took place yesterday at about 12:30 as the market was pushing lower. So that's where we saw that actually was a three-river Morningstar pattern out there as well that finally took place at 1:30 in the afternoon. So we do know where the bulls are hanging out inside of the Dow. Now, I did mention that Apple was out with numbers after the bell yesterday. Let's not take a look at the results. Instead, let's take a look at the results of the stock chart, trading at 510. So let's switch over. We'll go take a look at the NASDAQ futures here in a moment, but let's go see what Apple is actually doing at the 510 level out here. At 510, they're going to break through the consolidation little zone out there. 510 is going to take us down to the last time that we had a little sign of strength, which was out here on October 22nd. The low there is 508.03. There were 19 million shares on that trading time frame out here, so it's going to trade right into that. We'll see what kind of volume. Also, if we take a look at just simply retracements, actually trading at 510 is not that big of a deal. Because if you go from the A to the D point, and this was a 1-to-1, A to B equals CD, that means if you go from the June 28th low to the high that was put in here on December the 5th out at 575.14, if you go from that low to the high, you take your retracement rule, there's 3 levels that we like to take, or that I like to take a look at, 0.382, 0.618, and 0.786. Well, dead cat bounce. Nothing is ever wrong with the market moving and making a 0.382 retracement. In the case of Apple, that's 503.98. So we'll be watching that area, because if we see price close below there, that sends up a message that probably more like a 0.618 retracement of 460. Of course, it's all going to be about volume. But at 510 right now, I'm not talking 510 in the morning, although I certainly was up. We're not talking about 510, the price point out here. It's really not inflicting a substantial amount of damage as we speak here just at the moment. So now let's go back and take a look at the 30-minute charts. Let's go see what's going on inside of the March contract for the NQ on a 30-minute. Now, it's just a 30-minute basis, but it gives us an idea of what is taking place here as we come into the market open. What you will see is you'll see also a price relative strength divergent pattern out here. Now, that pattern was really confirmed here right at the 2:30 a.m. time frame here this morning. Nice big bullish engulfing candle session out here. and a couple other things that were going on. So we've got a little hammer candle inside of the Dow. Now, this price divergent pattern, this took place yesterday afternoon, yesterday evening at 6:30 in the evening. So you got a little hammer candle that says important support inside of the NQ as the market opens, 34.7925 out here. Now, if the hammer holds as a bottom, yes, we would see a bounce. We're seeing price run-up strength divergent patterns. These are being confirmed. They are suggesting, well, they're more than suggesting. They're telling us that the bulls are doing everything that they can to try to move the markets higher. So now we've taken a look at weakness, absolute weakness, which is the Dow. Unquestionably, the Dow. Then we're taking a look at what is weakest here this morning, certainly driven by Apple to the downside out here, trading out at the 510 level. And what we're seeing here is we're seeing a bit of a hammer candle. Now, if these areas fail, it's toil, double, whatever it is, Macbeth. I've got to actually remember that. It's so many years ago. It just simply means trouble. How about that? It would mean trouble. Now, let's take a look at the ES Mini. Let's go see what's going on inside the ES Mini with the same time frames out here. What we'll see is that same price relative strength divergence. And folks, just because we see it in one does not mean we see it in all. In fact, it's quite unusual to see it in all time frames for each of the futures contracts. 877-927.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It is always better when we're together. Thanks so much for joining us here this morning in the pre-market. Leading the charge, the upside. Dollar-wise, we've got Cliffs Natural Resources. They closed at $19.40 yesterday, trading up $21.81, so it's not like they are blowing the cover off of the ball out here. I don't see what is behind the move out here. But in any event, it is trading to the upside. You got Rio Tinto Mines, RIO is a ticker symbol. They close at $51.95. They're trading at $53.21. Carnival Cruise Line, CCL, they're trading at $39.37. They're trading up $40 and a little bit of change. So Apple to the downside. You got Rent-A-Car Inc., RCII out here. They closed at $31. They're trading right now at $25 and change out here. Do I see their numbers? Yeah, they did revenue $769 versus $758. Earnings of $13 million versus $47 million out there. So looks like their accountants there are struggling. Maybe it's not their accountants, but they are spending more money than they certainly did last time around here. You got Corning, GLW is a ticker symbol. They're trading at $16.86 right now. They also came out with numbers. Revenues go like this: $1.96 billion versus $2.15. So not being able to make the top line. On the bottom line for their fourth quarter, they were able to make that $421 million versus $155 out there. Tile Shop Holdings, TTS is a ticker symbol. They closed at $14.72. They're trading at $13.50 right now. They also were, no, I don't see the numbers behind that. In any event, let's go back. Let's take a look at some of the charts out here. Now, we were looking at a 30-minute chart here earlier. I've got the 120-minute chart for the ES Mini up on my screen. That, too, shows that price relative strength divergent pattern out here. Now, you really need to understand how to trade this pattern, folks. Just because you see a difference between price and relative strength, that doesn't mean that the market turns there. You really need to understand your reversal signals out here, as you really do, quite frankly, with any trading system that you have out there. That's really part of the strategy. You see, a tactic is nothing more than the tactic here. A tactician would be able to go and take a look at a pattern on a screen and say, you know, it's a head and shoulders, it's a double top, it's a double bottom, it's a this, it's a that, it's a price relative strength divergent pattern out there. It doesn't matter what it is. Without a reversal candle out there, price is going to continue to move in the same direction out there, and it's not really going to reverse. And you also need to be taking a look at what are your trading strategy timeframes out there. For those of you that are really just listening on the show and you are managing your money for your longer-term basis, you know, you really should be focusing on weekly charts out here. You should be focused. Speaking of weekly charts, let's go take a look at a chart that maybe you might want to focus in on. That's assuming that you've got your investments here traded or your decisions based on the S&P 500. Let's just do it by taking a look at the SPY out there, because you certainly can't take a look at the SPY chart I will do that as soon as I can find the actual tab on my screen. I know it's just right around the corner. Where is it? Oh, my goodness. It should be so handy. It probably is. It's right in front of me. Here we go. No, that's not it. That's not it. Oh, my goodness. There we go, Spider Weekly. I knew it was right in front of me. I just couldn't see it. That's like when somebody says, honey, would you go get the salt? And you say, where is it? And they say, well, it's right there in the cupboard. And you open up the cupboard and you say, I don't see the salt. Where's the salt? And, of course, they say it's right in front of you. And you say it is not in front of you. Folks, you see, the whole point of this story is you see what it is that you want to see, because each of you who've done this, that person's going to walk right over, walk right in that cupboard, look right in front of you, and hand the salt to you. Well, in this case here, if you are making your trading decisions here for your longer-term accounts, you certainly want to be paying attention to weekly charts and or monthly charts. If we take a look at the weekly chart for the SPY, the SPY, what we can see here is we've got a little rising price channel with inside a shorter rising price channel inside the larger price channel. Larger price channel, by the way, takes us back into the 2009 time frame. So if you are watching us on Tiger TV, those are the blue diagonal lines. However, if we come off of that important low back in November of 2012, those red lines out here, this is the rising price channel. And as the market moved lower yesterday, it tested the bottom of that price channel. For the week, if we see it close below this, and we have not seen it close below this since the November lows out there, that would suggest that you start really taking a look at your holdings that are pegged for your 401ks, your retirement funds that are pegged to the S&P 500. We're not there yet, but it is something to be paying attention to. 877-927-6648. Give me a call, folks. We would take a look at your stock chart and answer your question however we possibly can. We'll be right back.
It's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Heck's newsletter, the Technomental Commodity Report. a 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races. We got the Dow up 67 points, trading out at 15,904. S&P up 5, trading at 1786. Composite down 5 points, trading at 4,078. Russell 2000 up 2.5, trading at 1130. Apple down $43 right now, trading at 508. Microsoft up 12 cents. Google up $14. Google leading the charge. The upside. Baidu just behind them up $7. Visa up 4. Amazon up $4.50. YY Inc. up $3. That's up about 5%. Cena Corp up $2.50, up 3%. Tesla up a couple of bucks. MasterCard up a couple to the downside. Apple, of course, leading the charge. Polaris Industries, PII, that is trading down 7% this morning, off about $10. They reported revenues. Let's see here. They did net income of $108 million versus $88 million, so up about 23%. Must be a top-line or guidance issue that Polaris Industries has. PII, Rent-A-Car Inc., we mentioned that. That's down 18%, off $5. Chef's Warehouse, CHEF is the ticker symbol out here. That is out with numbers, and I don't see... Yeah, here we go. Revenue, $670 million versus $673. That is trading the CHEF. That's trading down 21% here this morning. Seagate Technologies, STX, are down about 8%. Seagate out with numbers. Revenues of $3.5 billion versus $3.67 out here. So not being able to, most companies here are missing the top line. You've got Live Deal, LIVE. That's off 13% here this morning. I do not see what is behind that move. Green Mountain Coffee Roasters down about 2.5%, off $1.60. And again, the Dow right now is up $61. So let's take a look at what else. We were taking a look at the SPYs out here. So we're looking at how they ran into support on a weekly chart. Now, what were they doing on a daily chart out here? I'm glad you asked that question because I'm going to go ahead and answer it for you. We take a look at both the diagonal support of that rising price channel, and we take a look at what the SPYs actually did yesterday on a daily chart from a horizontal standpoint. So we're getting it all ways here this morning. We're taking a look at the December 18th swing point. That is a swing point, the low of which is 177.32 on the SPY, 234 million shares to the upside. Yesterday was a test on lighter volume. 180 million shares versus the 234. Rejected the price, closed higher. That says that we should see a bounce. Now the question is going to be, where will that bounce take us to? Well, if you just take a look at normal retracement levels, you would expect at a minimum 180.04. 180.04. Right now you're trading at 178.42. Why 180.04? Well, because that happens to be the 0.382 retracement. Where is the likely outcome? The more likely outcome on a bounce, the more devious outcome on a bounce. Where is it that you could get up the normal C point of an A to B equals CD down? You know the answer. That's right. Suite 618, just like here in beautiful Clearwater Beach. If you were to visit the TFNN headquarters, you would come visit us at Suite 618, and that would take you to 181.85. The top of the downdraft from Friday happens to be 181.66. I would say if the market's able to get some legs out here, that's where the bounce ought to take us to, is right into the top of that candle. So we got a rejection of a swing point, an important swing point from a horizontal standpoint. That was the low of December 18th. That was a rejection on price and volume. And we know we were running into a support area on the longer term, on the diagonal channel support, and that was coming off of the November 2012 lows out there. So that's been a very long established price channel in the marketplace. Let's go take a look and see what's going on inside of the metals market as well as the currency markets out here. Inside of gold, right now we've got gold is trading down $6.50. It is tinkering like Tinker Toys with that trend line. That's the blue diagonal line on my screen. Slipped back inside it yesterday. Traded just a tad lower here. It's got a confirmed A to B equals CD up, but there's two competing trends out here. To be bullish, to be really bullish, you want to see gold get back above that descending trend line out here. Right now, it's really just building, as Tom likes to say, building cause, building up the energy in order to really take it to the next level. And that next level right now is just established at 1361. Your 1 to 1.618, A to B equals CD to the upside. Let's go check in on silver, see what hi-ho silver is doing here this morning. Doing absolutely, positively, basically nothing. Just still continuing to trade in a sideways mode out here, and it has been doing so for quite some time, all the way back to November the 20th out here. So silver not doing a whole lot. In the case of light sweet crude right now up $1.48. Moving lower here yesterday. Now this, in fact, let's see what kind of volume here. What light sweet crude is doing is trading into the swing point from January 23rd, 250,000 contracts out there, 69,000 here this morning. Boy, if it can take out 97.84. Do it with volume. That actually sets up an A to B equals CD to the upside. So it's got two competing patterns out here. I cannot tell you which it is going to which is going to prevail. Let's go take a look at both of those patterns. Here's the one that is most recently setting up. Let's take a look at that retracement. Let's take a look at retracement here from yesterday. And yes, it was a 0.382 retracement, 95.32. Let me just clean up the chart here just a tad, because we can go draw everything back in here. I don't want to draw everything, so to speak, but if we take a look at off of the low out here, January 9th, we'll go take a look at the Rhodes momentum trend signals as well. But if we take a look at the low on January 9th at 91.24, if we go from that low to the high out here on January 23rd, the actual 0.382 retracement, 95.32. The low here yesterday, 95.21, with a close at 95.63. So it made that normal retracement, just like we were taking a look at inside of the SPY out there. So that becomes pretty easy to identify. But now today, what you're getting is a nice move higher. That was it's questionable whether that was enough of a trend to call today's candle a bullish engulfing candle, because it's more of a sideways move, really. So we won't really look at the candle as any kind of reversal signal, only to say that if it's able to take out 97.84, do it with volume, that would confirm your A to B equals CD up. You would say, where would that take you to? So here's the bullish side of this trade out here. I would say that would take you into the 104 area out here, 103.62 to maybe the 108.89-ish range. So somewhere inside there. I know it's a 5-point range, but that's the range that you would be taking a look at. That would be the bullish side. The bearish side is just simply that it's going to go ahead and it's going to move lower to about the 88.13. That A to B equals CD, really $84. is more likely that pattern. So that is still in play here as well, and that is on light sweet crude. Let's go take a look. I mentioned let's go take a look at the weekly and daily if we can. Let's go pull that up here. Just got to find it on light sweet crude. Let's see if there's any kind of message here. I think it's been traveling in such a sideways range for the most part. We won't see anything really clear out here as soon as this pops up on the screen. So it does not on the weekly here, shows that we are on the weekly chart, this week, it's showing that we're in bullish mode. You got actually a buy signal on the weekly chart. Let me grab my crosshair on this larger term time frame. We got the bullish signal actually came in the week of December the 6th out here. You've got, you've got a bit of resistance right here, which is at the 200-day exponential moving average. That is right now at about 97.78 out here. So that's another area. If it can clear the 200-day exponential moving average on the daily basis, if it can get over that swing point, that is what would be setting up an A to B equals CD up. And it would be a nice A to B equals CD up pattern. That is on light sweet crude. Let's go take a look at the at bonds out here. Let's go see what bonds are doing this morning. You've got bonds had pulled back a bit. They're fighting off that here. So really just traveling sideways ever since completing a 1-to-1 A to B equals CD up at the 132-ish level out here. So no real reversal signal yet from a candlestick standpoint inside of the 30-year Treasury. Let's go take a look at the natural gas. Let's go see what natural gas is doing out here. We've got natural gas trading out at $4.91. This here also as well, not really giving you any kind of reversal signal. Yesterday's candle was a dark cloud cover. That just forecasts potential rain out there, but that's all that it's doing here as we speak right now. Today here having a sideways move. If we go take a look at the currency market, let's start in on the Queen. When I mean starting on the Queen here, you can see it's really just traveling sideways. Of course, we know it's trading with inside the zone of silence out here. And that's the diagonal lines of the red descending price channel. That's the long term, and the shorter term rising price channel. It's the blue diagonal line up here. So not a ton of movement inside of the euro out here. If we take a look at the euro Japanese yen, this was the weekly chart. This is the weekly chart. We can see this thing here is still bullish, came back and just simply has tested the old resistance level. That's the weekly chart. We'll take a look at a daily chart here. If not during this hour, we'll certainly take a look at the euro Japanese yen on a daily basis. In fact, let's just save it for the next segment because that'll be helpful to understand the potentiality of this little bounce that we're seeing here. And it may not be so little, the bounce that we're taking a look at inside of the market. Great British pound, though, we do want to take a look at this. This may be providing the best single opportunity from a currency standpoint. This is a weekly chart. We won't know this till the end of the week, but you can see still trading above on the weekly chart, still trading above the old resistance line out here, and that sets up one heck of a nice consolidation move up into the 182.34-ish level. That's the currency pair I would be focused on at the moment from a currency trade standpoint, especially if this week it can stay above and close above that resistance level. Again, that resistance level, which is trading above right now, which should become support, would be 1.6457. That is on the Great British Pound. Let's take a look at the U.S. dollar, Japanese yen out here. Let's go take a look at the daily chart on that, see if we can see any kind of a pattern out here. On the daily chart, you've got the Gartley buy pattern. Now, it has not confirmed with a reversal signal yet, but we do have the pattern that's in play, and if this pattern, in fact, proves out, you're going to see this currency pair really take off topside. Now, it really needs to clear the high of the candle from January 24th. That's out at 103.57 out here. So that's the high that it needs to get above. If we, that's the only pattern that I see out here, I'm sorry, on the daily chart for the moment. Let's go back and take a look at Apple. Let's go see what's going on there from a volume standpoint here. As we take a look at Apple, that is trading down about $45 right now out at the 506 level. So you can see it hit that 0.382 retracement, doing it with volume of 7.9 million shares coming into the area where it had broken out with 19 million shares. So it's certainly got volume to do the damage to the downside, and that is inside of Apple. It is well below the 50-day exponential moving average. That happens to be priced at about the 541-ish type area out here. Right now, we've got the Dow is up 75. S&P is up 7 points out here. Let's see what else we've got that is popping and dropping. You've got Polaris Inc., PII. Let's go see what's going on there. It's got down about 5-6% here this morning. Let's go see if this is down with some volume. So this is gapping down with volume. Let's go see what this is going to trade into. So far today, down with 404,000 shares. The next area here where this is trading into its last sign of strength is it's actually trading right into it, which was from the trading session of September 20th. That had 1.6 million shares. So I'd say it's coming into that level hot. That says it's also trading right into, and that has not hit, is the real last sign of strength out here. Polaris Inc., if it can slow down the volume, it's the first time that you're really seeing any kind of significant volume, I believe, off of the highs out here. So this is still, I'm sure, on the IBD 50 out here, and first sign of institutional selling really was yesterday inside the market with 1.3 million shares. So the damage was not too bad, but potential buy on this equity might be down around the breakout from September the 10th, somewhere maybe around the 115, 59-ish type level out there. That is on Polaris Industries. Let's take a look at Seagate. STX is the ticker symbol. Let's go see what that is doing this morning. Well, it's moving down, and it's doing it with with volume, 9.5% down. Let's go see what Seagate is moving down into. This is Seagate. The last time it had a breakout session was on December the 20th. It's trading right into that. It was 10 million shares to the upside, wide price spread, accelerated volume. It's come back to the breakout. It's trading just slightly below the breakout candle. I always like to use the lower volume of the trading session before that sign of strength. And this case here, that would be December 19th. That would be at the 51.86 type level. Volume, though, so far, 2.3 million shares to the downside, only 10 million shares on that breakout session, so it's coming in a bit hot out there. If it cannot hold this area, we ought to see Seagate come all the way back down to the swing point lows from August 29th, 2013, right around the $37 area. So that would be quite a move to the downside inside Seagate Technologies. Dow's up 77, S&P is up 7 points. We'll be right back, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow is up 67. S&P is up 7 points. New York Stock Exchange up, lead the charge actually to the upside out here. So that's another bullish sign here for a bounce that is underway in the marketplace. Now, not to get overly enthusiastic, because we won't here. The New York Stock Exchange is in bearish hands, and I don't expect that we will see the bulls take control of that today. In fact, I don't even know that it's physically possible. I don't recall the number. It's over 3,000 net advancing issues that would be required. Basically, you need 100% of the issues. So it's not impossible, but it is a hurdle that would be very difficult to climb. Right now, you got about 1,170 net advancing issues. So you got advancing issues outpacing decliners by about not a total 3-1, maybe about 2.5 to 1. We are taking a look at the New York Stock Exchange out here, so I don't have the oscillator and the summation index. I just didn't get a chance to update that data. I have to do that manually each night out here. But what we can take a look at, what we can take out of the stock chart here for the New York Stock Exchange is yesterday's move down was a 100% move of a move, so it came all the way back down into the swing point, certainly of the December 18th time frame. So that December 18th, just like we looked at in the SPY, that was tested. I don't know. I don't have really the volume reading on that. That's a whole another dynamic out there. What we can take a look at is we did see a rejection of price. We saw 100% move of a move inside of the New York Stock Exchange. Of course, you can see that that is really a floor of pretty decent support out here. The New York Stock Exchange has been traveling in that area really since October of 2013. October 2013, the low there was 99.41. That in essence is what was tested as well yesterday. So it's just simply another indication of a pretty good bounce that we should see in the market. Now, what is it that I would actually expect out here? We've really seen some damage done inside of the markets on the daily, even on some of the weekly charts. Now, we looked at the SPYs. We took a look at the SPYs moving into the support level out here. And what we really want to be paying attention to this go-round here is really the volume behind any move out here. And if we do see a volume that is light on the way back up, then what this could really be setting up here is a nice A to B equals CD down. And the market is just deviant enough. You figure you had the numbers out with regard to durable goods this morning. They were bad. So and you've got the Fed meeting, the FOMC is bad news, good news. Are they going to keep the foot on the accelerator? All of that talk, I'm sure, must be going on the airwaves out here, not necessarily that's going on right here. And the market could be just deviant enough to have a big day today. Up, Dow up 150. 175, who knows what it might be, or certainly over the next couple of days, a nice big bounce just to be able to say to the dipsters, yes, they were right again out there. So that's why we're going to be paying attention to the volume on this bounce. We'll be paying attention to other signals out there as well. Folks, if you have never test drove Mastering Probability, couldn't be a better time for you to do that. Let me help to educate you. Let me teach you. Let me show you all the different things that we look for. Any of those are things that we don't even take a look at here on the air. Right now, you've got the Dow is up, and so if you'd like to access that, you can do it for 30 days, unconditional money-back guarantee. Just click on my name on the homepage of TFNN.com, and you can start your subscription today. So as we end, we know what we are paying attention to, and it's really going to be the volume on this bounce. All the signs are out here that we should see a bounce in the marketplace. Folks, if you are out to start your Tuesday, please don't forget you are your own artist. That means you can control and paint whatever picture it is you want. Today, I want you to do it from this day forward, but I'd really like you to do it today. Every person you come in contact with, go tell them something you appreciate about them. Have a great Tuesday, folks. Look forward to seeing you soon.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.